Hi guys, and welcome back to another episode of Crypto Scoop FM. A lot has been happening in the market over the last 3 or 4 days. There has been a pullback as well, a mix of both geopolitical news around the Trump Putin and now the Trump Zelensky and European leaders meeting together, kind of maybe spooked the markets. Then there was also this huge ETH staking queue, which people wanted to withdraw. So a lot of things that happened in the market. I'm going to cover a lot of them today, but very briefly. But the big thing that I want to reveal today are 5 tokens that I think are evolving into a new meta. And this meta, guys, I feel is going to be one of the strongest performing tokens of this cycle. So I'm going to reveal what that meta is, and I'm going to reveal what those tokens are. So stick around and let's dive in. Now, if you're new here, I'm Rohit. I've been working in crypto for the last 4.5 years, where I held multiple exec roles with companies like Polygon Labs, LongHash Ventures, and Socket Protocol. This has been a great journey for me because it's given me this front row seat to basically observe everything that has happened in the crypto markets over the last 4.5 years at least. So this is technically my second cycle, but first for all effects and purposes. So just like you, I'm learning and I'm just sharing what I'm learning every day in the markets. Okay, with that, let's dive in. Now, before I share any alpha though, I want to say that nothing that I say here or share with you should be construed as financial advice, legal advice, or life advice. The truth is, everything in crypto or broadly in markets are highly risky and they could go down to zero. So, this is just me sitting in a room behind my PC and sharing my alpha with you guys. So, take it with a pinch of salt, right? Okay, so let's dive in. Now, the first thing that I want to start with today is something that caught my eye, which is the Ethereum ETF inflows. And if you look at the last 5 days, the last week actually, week ending 15th of August, we saw cumulatively over $2.6 billion of ETH inflows. Now, guys, this has been the highest ETH inflows in like ever, and we should not take this lightly because it's very clear that there is so much demand for Ethereum right now, and this is just a precursor for me right now. So it's great news. If you go look at Bitcoin as well, even Bitcoin has had pretty strong inflows, but nowhere close to Ethereum. Like Bitcoin, if you look at it, has had almost 400 $550 million odd worth of inflows, still quite strong, but we can already see that we're in that phase of the cycle, and we discussed this before, where ETH is now leading the charge, right? So we're in second stage. Now, finally, very quickly, also looking at Solana, although this is a very small ETF, but we did see a huge inflow day before, last week on Thursday, when almost 13 million flew into the Solana ETF, and overall, almost 167 million dollars has now been invested in the Solana ETF. So, very very bullish for Solana as well. But clearly, we can see that ETH right now is the king of the crypto markets. Right now, some other quick updates. Now, Bitcoin, it dropped below 115K briefly. I think it's currently trading. Let me see what it is, but I am pretty sure it's probably trading at somewhere around the 115, 116K. Yeah, it's at 116,447. So we saw a little bit of a correction. It touched a new all-time high on 14th of August, and since then, on a daily basis, we're seeing a correction happening. Now, is this something sustained? Is this telling me that the market is now starting to do a reversal? I'm not quite sure, to be honest. I think we still have a lot of bullish indicators remaining, and so I do see Bitcoin this cycle going much higher, like at least 160K, 165K levels. Like that's what my personal target is. But it is very much possible that at this point of the cycle, maybe Bitcoin will go sideways for a much longer time frame. kind of build more liquidity stability at the 119, 120K range before kind of, checking in again. But anyways, interesting to see. Now, Michael Saylor has signaled that he will buy more Bitcoin, and in fact, I was reading earlier today, and he did end up buying some Bitcoin. But he also revealed his new strategy around how he's thinking about buying Bitcoin. And let me see if I can find that for you guys. So let's just look for MicroStrategy Bitcoin. Let's see if we can find. It was a very nice chart that somebody made. Yeah, there is the guidance from Michael Saylor. And he says that he will continue with his ATM, MicroStrategy equity, like reflexivity. And he's given us guidance on how he will basically buy all of this Bitcoin based on what the MNAV is. So he says that if MNAV continues to trade above 4, or whenever it reaches 4, strategy will actively issue MSTR to acquire Bitcoin. What this means is, and you should be very clear with it, that MNAV multiple basically gives you the reflexivity on the MicroStrategy token, which is basically by every time the higher the MNAV, the more Bitcoin they buy, they're able to buy accrue more sats per share. And as that number kind of increases, you see, if they buy, let's say, 1 Bitcoin, which is worth 100K, the per sats impact on the stock is much higher, and hence you see MicroStrategy will do like 5 times that number, right? So that's exactly what we've seen play out in the last 3.5 years. But in any case, if they trade between 2.5 and 4x NAV, then they will opportunistically issue more MSTR. If they are trading below 2.5x, then they will tactically issue MSTR to pay interest on debt obligations, to fund preferred equity dividends, and when otherwise deemed advantageous to the company, right? So below 2.5, which is, I think, where they're at 1.5, 1.6, somewhere around that, they're basically looking to tactically issue to pay down their existing obligations. And this is also, for me, the most scariest bit of the whole game, because if we see the Bitcoin price break and go down, then the MNAVs will suffer. And if the MNAV goes below 1, then it's going to be harder and harder for MicroStrategy to continue, tapping into this infinite money glitch. I don't think it's going to happen. Like when I say don't think, I think the probability of this happening is probably 15%, 20%, because the long-term fundamentals of Bitcoin remain. But guys, it is true that it is becoming a harder and harder asset, but then there are things out of our control which we cannot even predict. So we can't predict the price of Bitcoin, what it's going to be tomorrow. We can't predict how any market news will impact this. So we're just going to we should keep this in our minds when we think about our own portfolio strategy, right? So coming back, Metaplanet, they added 775 BTC for 93 million, raising their total BTC holdings to 18,888, worth $2.2 billion. So Metaplanet, guys, keep an eye on the Metaplanet stock as well. If the MNAV moves, and if they have more, if I don't know if they can pull up a sailor, because there's only one sailor in the market. Like there's only one Tom Lee in the market with Bitmine. But I feel like this is overall, extremely bullish for Bitcoin, because there's consistent treasury demand for the ETH and BTC now. In some other highlights, Japan's FSA has now approved a yen-pegged stablecoin. Of course, I mean, we're going to see this more and more happening, not just from Japan, from China, from India, from other countries as well. They would definitely want to tap into a much better, financial programmable money system, which allows them to keep themselves competitive in the market. Now, South Korea is also introducing a stablecoin regulation bill, because there's a lot of organizations apparently who want to partnership. There are banks in South Korea who want to partner with Circle. Interesting news, and also kind of bullish for Circle as well. Now, Centrifuge, and guys, if you haven't seen my real world asset video, I'm going to leave a link to it below, and also there's going to be a link up top. So I want you to check it out, because I think in this cycle, given everything that's happening with digital asset treasuries, given how we're looking at the evolution of the regulatory clarity around crypto, it's very clear to me that the big game and the long game here is real world asset tokenization. And even a much bigger game than that is RWFI. I think RWFI is unraveling in front of our eyes, and Centrifuge is one of the bigger players in this space, where basically they offer you an RWA launchpad and various platforms to issue tokenized assets on chain, from real estate to art to government securities and everything in the middle. So extremely bullish on Centrifuge, guys. Now Cubic, I don't know if any of you cover the Cubic story, and maybe over the weekend I'll kind of deep dive into this. But just very quickly, Cubic basically used. They launched a 51% attack on Monero, and if you're vaguely aware of the crypto consensus mechanisms, then most of the proof of work chains, they have what is known as the 51% attack, which is basically at a point when a foreign body can control the compute supply, and hence control the consensus. And once they are able to control the consensus, they can basically change the rules, and do things like double spending and other things, which is basically defeats the whole purpose of a blockchain. So they did it to Monero, and I think their next target is Dogecoin and the Dogecoin chain. So it will be interesting to see how this meta plays out, and what is the risk that we've always been discussing about proof of work chains. Are they really secure against proof of stake chains, where really the foundations of it is economic securities? Now with Bitcoin, it's a whole different matter, because it's just very expensive to do an attack like that. But for other chains, other L1s, which are still looking at the proof of work consensus model and who do not have that kind of a bandwidth like Bitcoin, it's going to be a very interesting play. So those were the big news stories. I did also find out something else, which is publicly traded Bitmain bought 373,000 additional ETH worth $1.6 billion. And a very good website if you should track, which is the Strategic ETH Reserve. If you see this right now, they now hold a total of 1.5 million ETH, right? This is huge, guys. And their MNAV, I think, okay, so they have some issues right now tracking their but I think it's around 1.4, 1.5 perhaps. And the next one is Sharpling. So you can already see these guys continue to accumulate more and more, Ethereum. The top three now being Bitmain, Sharpling, SBET, and the Ether Machine, DYNX. Which is combined holding almost $10 billion worth of ETH. And I think Bitmain has already said they want to buy around $20 billion worth of it. Sharplink has also said they want to buy about $6.5 billion worth of it. So we will see continued demand for Ethereum. You can already see here on this chart on the top to the right, how much of that activity is happening, and the split between, the ETFs and the treasury companies. So the treasury companies are now, they continue to expand, and they now hold almost 50% of the ETH ETFs. And they started much later, guys. We should keep that in mind, right? So very interesting on how much demand exists for ETH right now in the markets. Okay, stable coins are booming across layer 2s with Linea, which is the layer 2 by consensus, growing their stablecoin base by 200% of the last 30 days. Of course, Linea, they've come up with a lot of very interesting things, and so that big launch is basically attracting a lot of new capital in. Starkware grew by 71%, Mantle by 65%. Mantle also got, by the way, guys, big news here where I think it's BuyReal and Bybet. So the Bybet exchange, which is I think one of the second largest derivatives exchange, has now basically done some kind of a strategic partnership with Mantle, and the Mantle chain would kind of become some kind of a very important chain for them. And MNT, the token, would be they're going to build a new interesting use cases for that as well. So I'm extremely excited about seeing how this plays out. So, but overall, positive flows across all Ethereum layer 2s, kind of showing how much the stables market is growing, and also like activity is propping up not just on the base chain but also on these extended layer 2s. Now another very cool thing, which is the searches for crypto has returned to its highest levels in 4 years. And so you can already see 2021 at the peak how much, how many people were searching crypto. And we're almost nearing that range. And so I feel like, people are kind of interested in what's happening in the markets, especially with Trump and his family involved, buying Bitcoin, announcing a $2 billion strategic Bitcoin ETF acquisitions, and all the news around the World Liberty Financial launch, and other things that are happening in the market as well, which is basically creating a lot of buzz. So overall, good news for us. I think the October to December 4 year cycle all-time high thesis is still kind of intact for me, but we'll see how it plays out, right? Okay, guys. So this was the big, news stories for the day. But now I'm gonna reveal a meta which very few people are aware of. But I think if I, when I peek into the future and try to figure out where is the market going, then there are 2 or 3 things which are coming out very strongly. Now, the first thing is that the market is going towards more and more institutional, Wall Street or Main Street, whatever you want to call it, that adoption. So we're going to see more and more, banks getting into it. You already see stablecoin regulations in place. You're saying SEC is working on their project crypto, which basically is a broad outline on how they're going to regulate the rest of the market outside of stablecoins, and what would be treated as a security versus what would not be treated as a security. And the other big thing is DeFi, guys, decentralized finance. I think decentralized finance has now proven its mettle by achieving product market fit. And how do I know what achieves product market fit? Product market fit is when you have a product and you take it in the market and that product is able to make money, right? So, there's a lot of different ways to think about it and look at it. But really, fundamentally, if you think about what makes a product achieve product market fit, at the heart of it, it's the product's ability to generate revenue and then use that revenue to grow itself. It's and we've seen this meta play out in the real world, because companies which generate a lot of cash, they try to return that cash to shareholders by basically buying back their token, right? And so we saw Apple do that. We've seen many other. I think PayPal just announced another round of their buybacks as well. So we see companies in the traditional world who are making good money and want to figure out a way to drive up their share prices. They buy back their token. That buyback reduces the supply of that token or that stock in the market, and as a result the price goes up because there is so much demand and buzz around it. Similar is a process that we're seeing unlock in the crypto markets as well. You have a lot of companies which are generating like millions of dollars in fees every single day from actual real users who are coming to the platform every single day and using their platforms. And they're using all of this money to do buybacks. Guys, that for me is a huge meta, right? I think as more and more companies achieve product market fit, and as more and more of them start earning more and more revenue, they're going to use that revenue and they're going to buy their tokens. They're going to buy those tokens, which will reduce the supply of those tokens in the market and will create a positive price movement upwards. So that's basically the meta that I want to discuss with you today. And I really want to start with first showing you a list of projects that I think are extremely interesting in the market right now. But let me share those with you. So this is a great dashboard made by DYOR Crypto. I will leave a link to this dashboard at the bottom of my video. You should definitely spend some time to study it, because they broadly capture a list of projects which are currently making revenues in the market. And as you can already see, most of them are part of the DeFi ecosystem, because that's basically the only category, at least the ones that I know, which has achieved strong product market fit, right? And many of them, like let's look at Hype, for instance. Hyperliquid, one of the breakout applications this cycle. They're making around $7 million in fees every single day, guys, just for context. And 95%, 95 to 97% of this fee is programmatically buying back the Hype token from the market, which is consistently keeping the Hype token, go up and to the right. You can see that they're making about $100 million in monthly fee, guys. That's like $1.2 billion in a year. So imagine 950 million dollars of that going back to buy back the token. Hyperliquid has already reached the top 10 coins by market cap, which is a huge thing if you think about the project launching just like 6, 8, 10, I don't know, maybe a year back at best. So Hyperliquid for me is a very, very interesting project. Then there's ENA, which is also making about like $80 million in fees monthly, and is using a part of it to also buy back their tokens. There's Pancake Swaps, there's Jupiter, which I like very much, around $2 million in fees every single day, making about 100 million in a month. And then you have Maker or Sky, which is making around $33 million earned. You have Aerodrome, Aero guys, very strong thesis around Aero. They've already integrated the Aero DEX on the Base app as well as the Coinbase application. So in one shot, every token that is listed on Base would immediately be available for American customers to buy and sell on the Coinbase app. Extremely bullish, guys. And they're making around 80 million. How much is this? Aerodrome is making about $16 million in monthly fees, which is pretty good for a project like that. So I'm not going to go through all of them, but you get the meta, right? Now, a bunch of different tokens, a lot of them are listed here. I'm not going to cover all of them. I picked a few from this list, which I find really interesting. I did not get the chance, full disclosure, to study each one of them, but I will do that. And I think a better way to deliver this to you is through a spreadsheet or maybe through a blog. I'll figure that out and maybe release something over the weekend. But, Hype, 97% fee is going to the assistance fund, which is basically using it to buy back, right? Then you have Home. I'm going to ignore Home for now. I know it's a DeFi hub of sorts, but I don't know. I am not too bullish Home. But Jupe, I really like. 50% of the fee is going towards buyback, and I think they're making about $2 million odd. We're going to talk about this later, but Jupe is something that I'm going to cover next. Then the third one is Pump, guys. I think Pump is one of the most hated coins in the market. But now everything about Pump has changed, whether it is on-chain data, whether it is adoption, everything. They're now back to number one. But the stock price is not reflecting that right now, right? It's not reflecting. And they're buying back, guys, $1.5 million of Pump token every single day. So that's a huge amount of money that they're deploying back into buying back the Pump token. And sooner than later, we're going to see Pump rise back to its pre-ICO levels, and touch a new all-time high, given how much they're spending. And just to give you comparison, I think Pump spent about $1.5 million in buybacks last week, and in one of the days. And in comparison, Hype did about the same, right? Of course, now Hype has Hype's revenue fees has also gone up significantly. So now that comparison doesn't hold, but still for the fees, I think Pump is doing much higher buybacks in comparison to Hype. Another one, recent big star is Chainlink, which is Link. The reason I like Link is because most folks talk about XRP being the banker's coin, but in reality, I think it's Link. And a lot of folks who were buying XRP, the XRP bulls, are probably kind of moving into Link. I was also looking at Google Trends data, and you can go search for it yourself. If you go search for Chainlink and Link, you will see the search results are kind of moving up and to the right, which indicates that a lot of retail are now taking interest in Chainlink. They've now also launched their own buyback from their revenues. We're going to talk about that a little bit, but Link is going to be, another token that I would probably want to look at. So, all right, let's move on. So, what is really the meta, right? Let's talk about that. I think this was a great piece written by Crypto Nation, and they say the new alpha isn't memes and AI, but it's token buybacks and revenue shares. So, this narrative is quietly becoming the backbone of sustainable crypto growth, and I can also vouch for that. I think I'm probably seeing that play out right now. Then he says that buybacks look simple at first. The protocol earns fees and uses them to purchase tokens for the market. But the impact is far deeper. It ties token holder value directly to business performance, something crypto has historically lacked. For the longest time, and this has been our, if you've been in the market as long as I have, one of the observations was you have these projects which raise a ton of money from insiders. There's barely anything to look for it. The constant concern is all of this is vaporware. There is nothing useful happening in crypto, and so folks basically run some kind of insider cabals and dump their tokens on retail. But that meta is now shifting, right? Now you have, as I've already shown you, there are over 2 dozen projects which are making millions of dollars in fees every month, and they're using that money to buy back their tokens. So now, instead of dumping their tokens, they're actually giving value back to the community. The very ethos that actually brought a lot of people into crypto is because a lot of folks made a shit ton of money because they got into the ground floor. And now with this meta unlocking, we're seeing an evolution and I would say a maturity in the industry. And we're seeing high quality projects not only focusing on building great products, but they're also focusing on returning that value back to token holders, bringing better alignment and long-term holder mindset, which I think is very, very important. Now, to understand why this matters, look at TradFi. For decades, Apple, Microsoft, and Nvidia have been buying back to reduce the supply of their shares. That discipline, combined with consistent revenue, created some of the strongest compounding returns in history, and buybacks is proof of profitability. I started this show and I said how buybacks have been fairly common in TradFi. We've seen this. We've seen Apple do this very, very successfully. I think they did almost $40 billion or maybe even more worth of buybacks. So that is making people rich. And if you consistently make your community rich, they stick by you even in your bad times, which is very good to know. So crypto was actually doing the opposite. They were, instead of reducing supply, they were inflating by minting more tokens and dumping it on retail, right? And so buybacks now flip the script because it reduces the supply, and with consistent demand, you see the price action moving in a different direction. But not all buybacks are created equal. Treasury funded buybacks are just accounting tricks. They don't prove anything about sustainability. Only revenue backed buybacks matter because they prove the protocol can generate real, repeatable income. And this is important to understand, this little distinction. What are treasury funded buybacks, guys? So basically, you have a project which has a couple of $1 million sitting on their wallets right now, which they have probably raised from the market, and they're using that to buy back the token. If you really think about it, it's just basically taking money from one set of people and giving money to another set of people, and repeating and repeating and repeating this cycle to kind of create this mirage that something really cool is happening. And a good way to describe these kind of projects are basically just vaporware, and I would go in so far as to say that this is exactly the kind of behavior why a lot of people think, crypto is essentially just a game of, it's a huge bonsai, right? That's literally the definition of a bonsai, like taking money from one side, giving it to the next, and then creating these forward loops, right? Until the last person basically crashes and burns. So this creates a flywheel effect where users pay fee, the protocol revenues grow, revenue funds the token buybacks, circulating supply shrinks, confidence in the token value increases. which leads to more users and more liquidity, more usage, more revenue. The cycle repeats, and this is the difference between hype and a business. So great point again. Very very relevant. Another powerful angle is psychology. We should not forget that everyone who is participating in the market, they have their own mental models. They have their own mental frameworks on how they think about the markets, how they evaluate it, understand it. And once we know this, we know how news or information plays a role in influencing people, right? At the end of the day, you have only one trader is enough to move the market. So if that one trader is convinced and he has size that this is the right way, it's basically going to set the direction for everybody else. Right, so the market knows a consistent buyer exists, the protocol itself, that stabilizes the price action and reduces panic selling. As I said, only one buyer is enough to set the agenda in the market. Now, revenue sharing takes the model one step further. Instead of just buying back tokens, some protocols also distribute revenue directly to holders of stakers, and this makes token act like cash flow assets, closer to stocks with dividends than speculative coins, which also I think is important because at the end of the day, people are buying coins, especially more sophisticated investors like these digital asset treasury companies, or later when you have large institutional funds also coming in to buy the token, they are going to want to expect some kind of a return. And so this is a very interesting meta. Now, this is critical because it changes how tokens are valued. We move from vibes-driven speculation to fundamental analysis. And what's the protocol's unrealized revenue? How much of it goes to buyback? What's the effective yield? It's the birth of the valuation frameworks in crypto. So far, now I think it's a mixed feeling for me. I think at some level he is right when he talks about a new meta, which is why I think in one of my previous episodes I already said to you guys that there's basically two categories of tokens. There's one category of tokens which are basically companies. These companies are generating real revenues by offering a real credible product out there in the market to customers. On the other side, you have meme coins, you have culture coins, and you should not discount them as well. And I think I am a big bull of, especially for some of the memes, principally because I think the idea behind memes and the idea behind culture is the first time we can digitally put a value to it. And the value to it is how people perceive it, right? And so I think there is importance for both, but it's important to know what is what and describe them, define them, and then apply the appropriate lens to evaluate them. So he's absolutely right that buyback tokens or revenue tokens give me a fundamental approach to valuing them, and we should apply that, right? So now, risks remain. If buybacks come from treasuries, they don't last. If unlocks outpace buybacks, then the dilution wins. If a protocol has no mode, revenue dries up and buybacks stop. That's why research matters. Not all buyback headlines mean strength. Very, very important point. I think right now, a lot of even Tom, Dick, and Harry projects that I've never heard of in my life, they are coming out and announcing their buyback programs, but really it's just a way of fooling the market, guys. So we have to, as they say in corporate jargon, lift the corporate wheel and look underneath the skirt and see what the reality is. Right now, the real signal is consistent defensible revenue. Right, and why does this narrative matter? Because it's a signal that crypto is maturing, that tokens are no longer just about speculation, and this is the start of the ownership in real underlying economic engines. So every bull run has its meta. In summary, 2021 was DeFi farming, 2022 was NFTs, 23 and even 24, by the way, guys, was memes and then AI agents. And now 2025, we're looking at digital asset treasuries, we're looking at ETFs, we're looking at regulations, and we're looking at real crypto projects with sustainable revenues and buyback mechanisms. And then he kind of speaks about some of the projects. So I'm going to leave those threads, read through it again, think about it, and use the principles whenever you come across a token which is announcing a buyback. Don't hurry into buying anything. look for the fundamentals. You have platforms like Dune Analytics and others which offer you that granular analysis of data, and use that information to make your decisions. Okay, guys. Now, I did come across this data dashboard by Dropstab, and kudos to the Dropstab team, guys. But they prepared this list of 25 assets which have active token buybacks right now. I will drop this entire list at the bottom of the video, so you can go and spend some time kind of following these projects on Twitter, keeping a track of what's happening on them on your own sweet time if you want to do that. But I picked a few of my favorites, right? And that's what I'm going to cover today. The first one that I want to talk about is Chainlink. Now, Chainlink recently announced the launch of Chainlink Reserve, a new upgrade centered on the creation of a strategic on-chain reserve of Link tokens, guys. So here you have an example of a real company with real revenues, both on-chain and off-chain, using that revenue to buy back their own token. Now, the reserve is designed to support the long-term growth and sustainability of the Chainlink network by accumulating Link tokens using off-chain revenue from large enterprises that are adopting the Chainlink standard and from on-chain service usage. Now, just to give you some context on Chainlink is basically an Oracle provider, right? So what it basically does is it taps into various data sources, both on-chain and off-chain, meaning blockchain generated data and data that is not on the blockchain, but maybe blockchain projects need it, right? It could be the data from weather, it could be data from stocks, it could be data from the bond market, it could be data from the sports betting market, or whatever market exists out there. So basically it curates those data sources, and it creates these APIs that allow you to tap into that data, and they make some money by charging for access to that data, something like that. So they have generated hundreds of millions of dollars in revenue from large enterprises that have paid off-chain for access to the Chainlink platform. So that hundreds of millions of dollars would now kind of go into buying Chainlink. The reserve has already accumulated over $1 million worth of Link from the early stage process, and it is expected to gradually grow in the coming months as more and more revenue is converted into Link and placed into reserve. We do not expect any withdrawals from the reserve for multiple years, and thus it is expected to grow over time. And we believe that as an industry, as the industry demands for Chainlink's unique capabilities, the adoption of Chainlink services will enable reserves to grow further up. If you look at the Chainlink Reserve, and they've basically published this dashboard, and you also have an Etherscan link. Basically, you can see the wallet address, which is acquiring all of this, which is acquiring the Link token, and you can already see how much Link token they have. The 99% of the portfolio consists of Link token, which is in the blog, when they mentioned they bought $1 million, since then they have almost tripled it. So they now hold $2.8 million worth of ETH, which is exactly what we have, right here. So 100,000 Link have been bought at an average price of 19.65. Now let's quickly look at the chart. I was just trying to draw in some, levels and trying to understand where we are in the market cycle. Already, Link has seen, if I go from this level, which was right here, let me just move the chart up. So if I go from, not here, sorry, my bad. So if I go from here, which was, I think, like from here, right? So this was August 2024. It touched a high of $31 in December 24, then fell again, and since then has risen about 150% from these levels, which I think is a solid support from them. This was the first support, then this was the second, and now I think it's kind of stabilizing at somewhere around this level. I don't expect Chainlink to go beyond $10 now. But what is the upside for something like this? I think with hundreds of millions of dollars, you can already see the volumes are steadily increasing. I would want to see more correction, and also reflexivity, guys. I think it is one of the most highly reflexive tokens against ETH. So if we, instead of looking at Chainlink, Link USDT, if I look at Link and ETH, you will see the Chainlink Ethereum chart, how much of a strength it has shown in the last couple of, since the 7th of August. It's basically just strongly outperformed ETH. And even in the previous cycles, something similar we saw. So I feel like right now the RSI is too hot. So I'd probably want to observe the chart a little more. Let me just go back to the link USDT chart again. So let's go back to the link USDT. Okay, so the link USDT chart. Where did my drawings go? 1 second, guys. I think it was the link USD. I think it was the Buyback chart. I hope so. It was the Buyback chart. No, it wasn't. Oh, damn. Sorry, my friends. Sorry. Let me see if it was OKX chart. I think it was okay. Awesome. So I drew these Fibonacci retracements just to see how the price would react. So you can see, it went to a high, and when it did, it crashed. And how did the price move? Let's just zoom in a bit to see what happened. Come on, see. Let's just zoom in a bit and move this here. So it went to a high, right? It moved down. It came to the 0.618 levels, it's further down, and then at 0.5, it bounced again. There was a resistance at 0.618, then it bounced again, dropped even below 0.5, but could not reach 0.38, bounced again 0.618 was somewhat of a resistance, bounced back again, came down this time to 0.382, bounced again. This again became some kind of a resistance, fell, right? Again, 0.382 became a floor, but it could not sustain this, so it fell further, and at 0.236, and then you saw, each time it was rejected at the 0.236 level. So right now it is at this level, right? So I would probably want to see, I think it's going to fall back again, and we're probably going to see a retracement maybe at the 0.5 levels. So if I were to buy, my first entry would want to be at this level. Maybe the second entry could be at the 0.382 levels, which is where we've seen the price come back. Even when it has risen almost at this levels, it has crashed and kind of made a accumulation zone at this range. So my second buy zone should be at 0.382, and then probably I'd look at exiting at 1, which is going to be my first take profit level. So that's how I'm looking at the link trade, at least for the time being. Also, from a fundamental perspective, I think link is a token worth happening. Now, will the price exactly play out as I'm saying? No, definitely not. It's just a game of probabilities. My probability is there's probably a 50% chance, looking at how the price action has been before, that there's probably going to be a correction. And I will have chances to buy at the 0.5 level for sure, because we've already seen the price come at this level and test this level at a support range. So I feel like that something similar is going to happen. So you can probably enter like 25 to 30% of your portfolio, of your capital at this stage, and then maybe wait for a further retracement at 0.382. That would be at $18. So $18 and 21.6. All right, so that was all about Link. Now, the next one that I want to talk about is Syrup. Syrup, guys, or Maple Finance is, and we spoke about Maple in the RWA video as well. So if you haven't seen that, I will link it at the bottom of this episode, and also up top on the right. But Maple, basically, you can already see their AUM is now close to like $3 billion, $3.3 billion. Almost $1.2 billion of loans are outstanding on the platform. $85 million of interest has been paid, and $9 billion of total loan originations. You can see their protocol revenues has consistently increased, gone beyond $500,000, $500,000 on a monthly basis to now almost $1.3 million. It's on track to achieve this number in August as well. So it's already at almost 990K. So, and we have 2 more weeks to go. So I'm fairly confident that it will not only meet this number, but probably even go beyond. So it's very, very strong. They have right now a proposal in the works, which is the MIP018. And what this basically says is, and let me just close this so I can read this post for you guys. So if MIP018 passes, it will increase 20% fee buybacks to 25%. So at 1.3 million guys, 25% is close to what? Almost 400K. So $400,000 of Maple buyback by the team. And I think this sets a great precedent for growth-oriented protocols. The Maple team has done a great job investing in growth whilst maintaining some value accrual to syrup. It's undeniable that that their use of revenue and treasury reserves to date has been very successful and a more efficient use of capital than simply directing 100% revenue back to token holders. So this, I think, is a very, very interesting, project as well. They're fundamentally growing. They have revenues to sustain their buybacks, and and this will basically just allow the reduction of the syrup token in the market. It is important to note that 80%, I think 80%. What is it? Let me check. Actually, so what happens is when they buy back the token, they actually return it to the stakers. So on this platform, you can buy the syrup token and stake it, and once you stake it, you receive you receive a part of the fee, something like a dividend, right? But now this additional token that is coming in is basically going to these stakers as well, which kind of increases their yield. On the downside, I feel when they do it, it will create at some point in time some kind of a sell pressure, because they will basically use the syrup token and dump in the market. So that's, or another possibility is they could increase their staking and stake even more syrup. So it's important to keep an eye on how that staking plays out. I could not find the exact data on their staking right now, but let me see if it is available on this dashboard somewhere, if we know how much stake. So about 398 million. I would want to keep an eye on the staked syrup and see if this is growing, and if people find the 3.14% APY interesting enough to remain staked with the new syrup token that they will. The protocol is buying back from their revenue and giving to these stakers, right? So I would want to keep an eye on that. But that apart, I think at $3.4 billion of TPL, about $500 million in FTV, $1.3 million in fees per month, using, wrongly said, but 20% of their fees right now before MIP 18 for buybacks is kind of cool, right? Kind of cool. Okay, now the third one that I want to talk about is Pump.fun. The reason is simple. Pump has now got back to that, they're now dominating the market with 80-90% of the market share. They are probably the top, revenue generating application on the Solana platform. They have big plans. They're buying back 100% of the pump token with 100% of their revenues are going back to buying the pump token, which is higher than Hyperliquid, which is one of my favorite projects. And overall, I feel like at this point in the chart, this is the lowest risk reward entry that we could ever get. I think the IPO was at 4 cents, if I'm not wrong, but at this level somewhere the IPO happened, right? And then it rose. It went to like $0.006, and then there was a crash here, which is basically, again, it's basically where it got rejected at this range somewhere around here. And now it's kind of at this range, right? So it bounced one here. I want to see if we will see a support at this range as well. I think a couple of candles is what I need. But I mean, if we look at the daily basis, it's just been a day since it's tested. So probably in a couple of days we'll see. But I am very comfortable to enter at 0.03 cents. I think we can easily see a 2x on pump from these levels, right? So it bottomed out to 0.002. I don't think if the price is going back to this level, especially given the pressure of the buyback. So definitely keep an eye on the pump token, guys. It's extremely strong. Now the fourth one that I want to talk about is Jupiter. The reason I like Jupiter is, one, because they've they consistently keep up with their buybacks. They're buying about I think last week they bought. Actually 11th of August they bought about 980,000 worth of pump, and it basically fluctuates based on how the revenues are kind of coming in. If you look at their revenues as well, the total volume has crossed almost $1 trillion, on 1.8 billion swaps, 52 million traders, which is a huge number if you think about it. The swaps are now kind of moving up and to the right. There was also this news, and still speculation, and I could not confirm this, but it's quite possible that Coinbase is now integrating the Solana ecosystem coins directly uh, to be traded directly on the Coinbase app, similar to how they did with Airdrome. And there is speculation that they might integrate Jupiter, because Jupiter is actually a DEX aggregator. What this means is they basically provide the central platform to route your trades to the best available AMM or DEX on Solana. So this could be, where are they routing it to right now? If we see, so I think they're routing it to. Let me see where it was. I think it's yeah. So they route it through Radium, Meteora, Solfi, and a bunch of other pools which are available. Orca and others as well. So much better price discovery, much lower cost, and a much better product. So I would keep an eye on Jupiter as well. From a price perspective, I think this is like the absolute bottom for Jupe. It's a very very solid team, running this project. And I feel like I'm extremely bullish about Jupe as well. So keep an eye on Jupe, guys. I think they have strong revenues. They have great upside potential, given where we are, almost in the 2024 levels, and you can already see the rally that happened from like 50 cents to like $2, almost 1.8 cents. So that's 3.5x from these stages, and we're kind of at the same range right here, right? So, and it has consistently kind of gone up from this late, and it's now creating higher highs. So that's also another bullish indicator. Now, so 49 cents would definitely be a good entry. I'd probably also look at, set stop, multiple limit orders to buy and sell, buying at 40 cents, then probably at 34 cents. And this has been their absolute bottom. So I would be very, very comfortable entering, Jupe at these ranges. The final project that I want to talk about is the recently launched Light token. And let me see if this is available on TradingView, because we will probably be able to see the chart better. Let me search for it. So it's not available right here, but let's just go back to CoinGecko and see if, let's see if we have the live chart here on the Gecko terminal. Wonderful. So we do have the light chart, and you can see like multiple like green candles over the last couple of days. Let's look at the 15-minute chart, just so we have a little more observations. So you can see, the chart is up and to the right. There was a little bit of a correction. It kind of came down to 11 cents, and since then it's kind of recovered again, and almost like 95% of all their revenues will go into, so they're looking at, they are looking at buying back from almost all of their revenue. And if they do this, somebody made this, projection at current buyback rates of the Heaven Dex flywheel, buybacks have a daily plus 63% impact on the price. So if that remains, which I think is kind of crazy, I don't think it's going to happen, but their projection is the price will go to $1.14 from where it is right now. So it's kind of interesting. It's an interesting project. Revenue has been strong in the last 3 days. Heaven has generated $864,000 dollars in fees on average, which is $288,000 a day. With fees consistently recycled into buybacks, we can project how daily inflows of this size will drive Light. If you don't know what Light is basically trying to build this like perp DEX on, I think, on Solana, if I'm not wrong. So it's an interesting project, and lots of competition in this space. But clearly they've shown that they know what they are doing. So hype would be my fifth idea here. It's kind of a really really like cool project. We should keep an eye on what's happening here, and use this to inform our strategy around buyback tokens as well. So that would be a wrap. I think I did almost a 54-minute video. I don't know how many of you would be interested to watch it, but if you do share your feedback. I think the buyback burn meta is real. It's strong, and it's gonna make people rich. So take advantage of this, but pick and choose your battles. Before I close this video, if you haven't seen my video on RWAs, then here is a link. You should definitely watch it because I think it's a strong meta. I think another big meta that is unlocking is in the base ecosystem, and you should watch this video. And I would leave you with that. All right, guys. With that, I would sign off, and I'll see you again soon. Bye bye.